Hello everyone, I am Debbie Lee and welcome back to my financial freedom journey. So today we are going to be talking about trading and market behavior again. And before we get into that, I just want to say I'm really glad that you're here still. And I wanted to say thank you for coming on this journey with me. This is a new one and I'm here for it and I'm ready to see what the future holds. So thank you for clicking on this video, and I'm going to be talking about something that is deeply relevant to where we are in the world right now: trading and market behavior. But more specifically, why FOMO is so expensive, how to build a trading strategy that makes sense, and how to understand risk versus reward in a way that protects your peace, your money, and your growth. But before we get into the teaching, I want to just ground this in the why. Why do I care? Why does it matter? Why am I speaking to you and not the finance bros, not the people who already grew up with wealth, but us? Why are we here? The working class girlies. I'm trying to do better for myself and I'm learning as I go, girlies. I want more financial freedom because I deserve peace, girlies, because I was there as well. And I know how it feels. So over the past year, I have been part of the White Summeroo crew. And since working under David Rains for the past year, I'm not exaggerating when I say that this has opened my eyes to everything that we were never taught about money, about wealth, about growth and opportunity. Like many of you, I believe when I grew up, I grew up believing that you work hard, you save what you can, you try not to overspend, and eventually, somehow, magically, you become financially stable. But the truth, that's not how wealth works. That's how we survive, but it's not how we build. I have seen everyday people like me. I started in your position, begin to learn how the markets move, how money travels, how price reacts, how investors think. And I've seen them shift from stressed and uncertain to confident and intentional. Not because they suddenly have more money, but because they had more understanding. And when I say that I saw something inside me, I said, this information should not be gatekept. Because I was sitting in the office one day and I was like, I need to get this out. And it shouldn't just be for the wealthy. It should not only just be for men as well. And it should not only be for people already in the room. We deserve to be in that room. We deserve to create that room. And we deserve to learn and to grow and to make mistakes safely and to do things with intention. That is why I created this space. And that is why we are all here today. So wherever you're tuning in from, you should drop a little comment and tell me where you're from. So I can see where everyone's from. So I can show you the guidance and support that you need. So if you have any questions, find us at the White Samurai team, and just know that we are building wealth differently. We build with knowledge, not hype, with intention, not desperation, with community, not isolation. All right, so let's begin. And I want to just begin before I get into the semantics of trade and the market behavior. I want to just start with this story. So the story of Ray Dalio, so his story and his journey teaches all 3 lessons in one arc. So most people see Ray Dalio now as calm and wise, collected, billionaire investor, author of Principles, founder of Bridgewater Associates, the world's largest hedge fund. They see success, they see the mastery, they see the legacy, but they don't see how he learnt it. And I think understanding how he learnt it is where the real lesson is. Ray wasn't always disciplined, he wasn't always patient, and he wasn't always strategic. In his early years, he was actually pretty emotional, pretty impulsive, and he was really hungry for the big wins, the big gains. He began trading as a teenager, literally in high school, when most of us were trying to figure out how to dress ourselves. He was the kid who was reading the Wall Street Journal instead of comics. He had drive, yes, but he also had ego. And that ego didn't work for him. It worked for him up until it didn't, because here's what's happened. In 1982, Ray made a public prediction that the US economy was going to collapse. He was confident and he was outspoken and he believed he was right. He went on television, he debated economists, and he spoke with conviction so strong that newspapers quoted him. But he was wrong. The economy did not collapse. In fact, it actually did the opposite. It rebounded, it strengthened, and it grew. It rose. And because Ray had positioned all of his trades and investments around his belief that the economy was going to fail, he lost everything. Not some money, not part of his not part of his portfolio. He lost everything. He had to lay off every employee he had. His company was reduced to just him, his entire company. His accounts emptied so low that he couldn't pay rent. He had to borrow money from his dad just to survive. Imagine that. Imagine growing a business and then having to sack everyone and going to your dad and being like, "Dad, I need help." Imagine being so brilliant and talented and hardworking and strategic, and one mistake, one emotionally charged belief takes everything from you. That moment could have broken him. He could have called himself a failure. He could have given up. He could have said, "I was wrong. I am not cut out for this. Nope. Don't want any more. Goodbye, world." But he didn't. He sat with the pain, he sat with the loss, and he sat with the humility, because it was a very eye-opening experience for him. He realized, my problem wasn't that I made a mistake. My problem was that I was too confident in being right, and I didn't respect what I didn't know. And that realization changed him forever. From that moment on, Ray built his entire investment philosophy around humility and probabilities. He created principles like you don't enter a trade unless you understand it fully. You don't rely on gut instinct, and you rely on the data and the pattern. You prepare for the possibility that you might be wrong. And success is not about being always right. Success is about controlling what happens when you are wrong. So from this insane story, we have the concepts that we are going to be discussing today. So, fear of missing out. Ray never learnt to chase emotional excitement again. His strategy was that he built structured decision systems to prevent emotional errors. And then the risk versus reward, he created rules to protect himself from losses bigger than his wins. So today, when we ask ourselves, how do we trade? How do we stay safe? How do we avoid mistakes that drain us emotionally and financially? So Ray's story reminds us that we don't need to be right all the time. You need to be structured. You need to manage risk, and you need to remove your ego. And you need to learn with humility and not urgency, because the market doesn't reward emotion. It's a market. It rewards awareness. His journey is not about finance. It's about learning to slow down, to think, to study, to ask, to question, to be open, and not to rush. And that's exactly what we're going to be doing today. So if you've ever been told you're too emotional, this one is for my girlies. If you've ever been told you're too emotional, you overthink, you take things personally, well, let me just say that you are human. You're allowed to be told that, and you're allowed to know deep down that those are emotions that you associate with yourself. But you're not flawed. You're simply just learning how to transition from an emotional response to an informed response. And that is a skill that will change your life. So if this hits home for you, I just want to let you know that you're not alone. You are not alone. Please reach out. Leave a comment if you want. And just know that I have also been there. I have also been at the lowest of lows. And if you want to learn how to do this in a community that supports growth through knowledge instead of hype, you are always welcome at the White Samurai team. Okay, so now that the emotional foundation is set, let's move on to the actual lessons of today. So in trading and in knowing market behavior, why do we want to know why FOMO is expensive? The fear of missing out. Why is that expensive? How to build a real trading strategy, and how to understand the risk versus reward in a way that protects your peace. So are we ready? Let's continue. So why is FOMO expensive? FOMO is Xpeno. That rhymes. So let's talk about it. It sounds small, but it is powerful. It's emotional, it's loud, and it's one of the fastest ways people lose money in the market. Because FOMO pulls you into situations where you don't understand the movement, you don't understand the timing, and you don't understand why the price is moving. You're just reacting to the fear of being left out. So this is exactly how beginners become gamblers. Because the fear of missing out happens when you see other people winning. You see price increasing and you think, if I don't get in now, I'm going to miss my chance. And that panic, that urgency is where people lose the most money. The market loves emotional traders because emotional traders are predictable. If you're emotional, you are predictable. They chase the top, they sell the bottom. The market is not just numbers. The market is also very much about the human psychology in motion. So how do we fix it? How do we fix FOMO? So you fix it by entering trades that you understand. Not just trades that are trendy, that are hyped up, that everyone's talking about, or that trades are just going up really fast. If you can't explain why the price is moving, what your entry price is, what your exit price is, and where your stop loss is, then you're not trading, you're just reacting. And reacting is expensive. So just take a breath. And take your time. Let the hype pass. Let everything settle and just go ahead with caution. Because your money deserves thoughtful placement and not panicky placement. So if you're hearing this and you're thinking, yeah, I needed to hear this, leave me a little ear in the comments so I know that you heard that moment and you needed it. So the second point, so how do we actually build a strategy? Trading. Number 2, trading strategy. How do we build it? So a simple trading strategy is a plan, a routine, a structure, and a workflow. It is you deciding ahead of time how you will move. A trading strategy includes what times you trade, what markets or pairs or coins you trade, what signals or indicators you use, how you determine when to enter, how you determine when to exit, and how you manage your losses. That is a very important step to note. So, a strategy protects you from impulsive decisions, market noise, emotional reactions, FOMO, panic, and overconfidence. Remember what Ray did? He was overconfident. So when people struggle, most people want to skip this step because they think it's boring. But strategy is the difference between a trader who lasts and a trader who burns out. And how to build one, just pick one market to start with, just one. Learn when it's most active, learn what affects its price movement, practice watching it daily. You don't even have to put any money in. Just watch it for a couple of minutes each day, 10 minutes or so, and write down what you see. Notice the patterns, the repetition, and the behavior. What is it doing? When is it going up? When is it going down? What time? For how long? So when you build familiarity, the market stops feeling chaotic and it starts feeling readable. So the fix for this is stop trying to trade everything. Focus on learning one market deeply. Depth beats speed every time. If you need help in doing this, that is exactly what I, myself, and the team at White Samurai are here to offer you. So we're learning with people that makes this so much better. We don't just learn from people, we learn together. We are all still continuously learning because we are children in the school of life. And it makes it 1,000 trillion million times easier. So the third point of today, we want to understand the risk versus the reward. Risk versus reward. So this is the heart of disciplined trading. Risk versus reward means before entering a trade, you know exactly what you are willing to lose. You know exactly how much you're willing to lose. You put it in thinking, if I lose this, it's going to be okay. My world is not going to end. Because that's exactly how you need to enter. And that is what you're gaining for. So, an example, if you risk $10 to make $30, your risk to reward ratio is 1:3. So that is what powerful trading looks like. It is not being right all the time, winning every trade, or constantly guessing correctly. Because even if you do study this all the time, no one has that answer. It is managing losses so that they are small and letting wins grow larger than the losses. So this is exactly how wealthy traders grow slowly but consistently. Why do beginners struggle with this? Because the ego wants to win every trade. Like I mentioned before in the Ray Dalio example, trading is not about winning every time, because Ray didn't win every time. He actually lost quite a lot once. It only takes one time. It's about winning smart. So the fix for this is you need to set your entry, your exit, and your stop loss before the trade. So the way that your emotions never get to negotiate with your wallet. When you remove the emotion, you create freedom. I'll just write those down. So entry, exit, and stop loss. So you need to work out what your entry amount is, your exit amount, and what your stop loss is going to be. So you did that all before. You have to do that all before. Otherwise, you're going to enter and you're not going to have any idea what's going on. And you're just going to wing it. That is exactly not what you want to do. So just as a closing summary, today we learnt what the trading and market behavior is in relation to why the fear of missing out is expensive, because emotional trading is unpredictable and reactive. A trade strategy gives structure, confidence, and calm. And understanding the risk versus reward, it protects your money and builds long-term wealth. So you don't have to rush, you don't have to be perfect, and you don't have to do this alone. I'm here, White Samurai here, and if you're ready to learn in a gentle and a supportive, knowledgeable community with like-minded people, please join us. Join the team at White Samurai. Drop a comment, message me if you've got any questions, let me know. And you don't have anything to prove. You just have to prove to yourself that you are worth this knowledge, because knowledge is power and you're here to grow. So thank you for watching this video today, and I'm proud to see you again, and I will see you in the next video. Thank you.